talk to me about gold.
Gold is the form of money that has held its value for 3,000 years. And it's the money that people jump back into when their country tries a different kind of money and that money fails. You can use gold to back your currency without making a political statement, without choosing sides in the world's geopolitical turmoil. But with the dollar, you're kind of choosing sides now. The U.S. has taken its currency from a neutral reserve asset, and they turned it into something where, you're for us or you're against us.
He's the author of The Coming Collapse of the Dollar and Money Bubble. He also has his own Substack, which thousands of people follow. Please welcome to the Daniela Camboni Show, John Rubino. John, so nice to finally meet you, have you on the show. Welcome, welcome, welcome.
Hey, Daniela, it is. It's nice to meet you. Thanks.
I always say it's fascinating, John, because we've both been in the gold sector for so long. And I think I've met everyone in it. Just today I was saying, wait, how could it be that we haven't met in person yet? And I'm sure we'll get to that one day. But for now, we'll take this show today.
Yeah, well, better late than never. And I've been a fan of yours for a long time, so it's nice to meet.
Yeah, well, I appreciate that. And I thought the timing was perfect because we have news that came out over the weekend that Trump advisors are discussing penalties for nations that move away from the dollar. This is an article from Bloomberg, which says former President Donald Trump's economic advisors are considering ways to actively stop nations from shifting away from using the dollar in an effort to counter budding moves among key emerging markets to reduce exposure to the U.S. currency. This is according to people familiar with the matter. So, look, you wrote a book on the dollar collapse over 20 years ago. So I thought you'd be a perfect person to ask about this. I mean, he's not in office yet. They're obviously preparing for a victory here. And they're obviously looking at the fact that the dollar could be threatened by concepts such as the BRICS.
Well, see, this is how empires think, right? They assume they have basically the right to rule, and anybody who deviates from the empire's line is automatically some kind of criminal. But I think what the guys in charge don't seem to recognize is that the reason other countries are moving away from using the dollar for trade and for reserve assets is that we've been abusing the privilege of having the world's reserve currency for a really long time now, and it's getting worse. If anybody steps out of line, we threaten to kick them out of the SWIFT international bank settlement system, or we sanction their products, whatever they're trying to sell, make it harder for them to operate globally. And we do that without regard, apparently, for how it makes these other countries feel. A lot of countries would just like to be out from under dollar hegemony, and they're taking steps. Some countries are cutting bilateral trade deals where they trade with each other in each other's currencies, and other countries are buying a lot of gold with the expectation of backing their own currencies with gold at some point. And you mentioned the BRICS, and that's a very loose organization of people who really wish the U.S. would stop picking on them. And they're making noises like they're going to create a currency that is maybe backed by gold and operates independent of the U.S. dollar for world trade. And these are all trends that are in place, and they're all bad for the dollar going forward. And they won't be fixed by the U.S. treating countries who want to trade in their own currencies like criminals. So I think these trends have legs, and it's going to go on for a really long time. And it's going to continue to move in the direction that hurts the dollar's exchange rate and its use as a trade currency and its use as a reserve asset. It's going in a negative direction for the dollar, and we're not doing anything to fix that makes any sense right now.
No, very interesting points. I mean, to your point, the discussions include penalties for allies or adversaries who seek active ways to engage in bilateral trade in currencies other than the dollar. But if we look at the status of the dollar today, every major currency in the world has fallen against the US dollar this year. an unusually broad shift with the potential for serious consequences across the global economy. This is an article from the Wall Street Journal that says two-thirds of the roughly 150 currencies tracked by Bloomberg have weakened against the dollar, whose recent strength stems from a shift in expectations about when and by how much the Fed may cut its benchmark interest rate, which sits at around a 20-year high. So the dollar is still the best in the world, John.
Oh yeah, it still remains the world's reserve currency, and this is one of the kind of funny aspects of a reserve currency. You know, a lot of debt is denominated in dollars out there, and a lot of countries hold dollars as reserve assets still. Um, and the U.S. is still seen as kind of the safe haven country. So when there's trouble in the world, even if we cause the trouble, capital flows into the U.S. and it keeps the dollar strong relative to other currencies. But relative to other currencies isn't really the best way to measure the strength of a currency. You should look at the purchasing power of that currency, right? I mean, the U.S. dollar lost almost 10% of its purchasing power in 2022. It was like 8.75%. Official, and the real number was probably more like 15%. So if all the world's fiat currencies are falling because they're all mismanaged, because it's a flawed concept to begin with, and one currency is falling a little more slowly than the other currencies, it looks like it's strong, but only if you compare it to a bunch of other crappy fiat currencies that are falling in value. So thinking of the US dollar as a strong currency because it's up against the euro or the yen gives you a false sense of perspective. So look at it in terms of
Right,
purchasing power.
right. Absolutely. Valid point. But paint to me, how does the path look like of the destruction of the US dollar? I mean, how does it get to the point where all of a sudden it's self destructing? Because folks may say, look, John, you wrote that book, The Coming Collapse of the Dollar, 20 years ago, right? Dollar's
Yeah.
still here. Now you might say, well, 20 years is not a long time for it to fail. Empires take, could take centuries, whatnot. But the point is, it's still strong, right? Yes.
Well, the two important points from this. One is never come to me with
Right.
questions about timing, because I clearly am not good at predicting what's going to happen in the short run, you know? So let's not do the what's going to
Nobody
happen in the
is.
next 6 months.
Right.
Yeah. But the other thing is that the world's currencies, the big ones anyhow, the euro and the yen and the dollar and pound sterling, are all depreciating now at an accelerating rate. You know, they're all losing value, and the amount of debt that these countries are taking on is going parabolic. So we're kind of at the end game here. Now, here I go again, predicting something that has to do with timing. But we are getting to the point where, for instance, the Federal Reserve, all the other central banks are in the same boat, but the Fed in particular is in a box that it really can't get out of, because we've taken on so much debt over the last 20 years that we're in a place now where inflation is rising and interest rates are rising. So if the Fed addresses inflation by raising interest rates even further from here, it bankrupts a big chunk of the global speculating community, which is to say most of the world now. In other words, housing and commercial real estate and local banks, they're all potentially blown up by higher interest rates. But if the Fed addresses the effects of higher interest rates by pushing interest rates down, then it's going to cause inflation to start rising at an even faster rate than it's been rising lately. And that's devastating for a financialized economy. So we're at the point now that seemed like it was going to come a lot sooner. You know, I literally expected 2008 or so to be basically the end of the fiat currency experiment. And that didn't happen. We were able to buy ourselves another decade by taking on immense amounts of new debt. But finally, those debts are starting to bite in ways that we don't have any answer for. So I think Japan might go first because they've got so much government debt that they can't let their interest rates go up. At the same time, the yen is plunging, even versus the dollar, but also in terms of purchasing power. And so they're stuck too. So I think the story of the next few years is going to be central banks having to make decisions about which kind of crisis they're going to bring on by trying to fix other problems. And there's not going to be a solution for it. So at some point, no, I'm not going to name a date here, but at some point, it dawns on the world that the central banks, with their fiat currencies, just can't fix the problems that are mounting out there. And then I think the markets react by front running, for instance, higher inflation. And that is basically the end game for these currencies.
I want to get back to the yen, but just to get back to the article citing, potential punishments for countries that deviate away from the U.S. dollar. You're saying that's bad policy, and it will eventually, turn around and bite you. So you're saying if those are the playing cards of the United States, right, that they're going to threaten penalties if you diverge from the US dollar, if you dump the dollar. You're saying that's not going to work for a long-term strategy. Can you just elaborate on that? Why wouldn't it work? Why wouldn't penalties from the strongest country in the world, right, the superpower of the world, why couldn't that be the solution to hang on to dollar dominance?
Because other countries do have things they can do. The U.S. is definitely the most powerful country in the world, financially and militarily. But it's not like other countries are slaves or anything. They are able to cut trade deals with each other that just bypass the dollar. They're able to accumulate lots of gold, which is what's happening right now. Foreign central banks are massive buyers of gold. In the last couple of years, they bought 1,000 tons of gold in each of the past 2 years. And the more gold they own, the better able they are to back their currencies with gold, if that's what it comes to. So they're gaining tools that allow them to bypass the dollar. And yeah, it's not something they can just flip a switch with or anything. They can't just do it today, but they can move in that direction a little bit at a time. And the reason it's gold that they're buying and not, Bitcoin or oil or other things like that is that gold is the form of money that traditionally backed currencies back when we had legitimate currencies instead of just these fiat things that are backed by nothing. And gold is neutral. You can use gold to back your currency without making a political statement, without choosing sides in the world's geopolitical turmoils. But with the dollar, you're kind of choosing sides now. The U.S. has taken its currency from a neutral reserve asset, where it is just what it is, and you don't have to choose sides by buying dollars. And they turned it into something where, you're for us or you're against us when you manage your foreign exchange reserves. And, nobody wants to be put in that position. And nobody, a growing number of countries don't really want to be on our side on a lot of big global issues. So that's why China, Russia, India, and a lot of other countries are building up such big gold reserves now, and they're continuing to buy. And that basically means two things. It means, one, there's a lot of upward price pressure on gold now because you got these whales in the market that didn't used to be there, but they're continuously buying gold, and they're not very price sensitive. They just they want it for the long term. So they're not going to sell. If gold goes up $100 an ounce, you're not going to see China dump a bunch of their gold and book a short-term profit or anything. These are very strong hands where gold is going. And then at the same time, that gives them a growing ability to back their currency with gold if they want to. And that's not an anti-U.S. statement as much as it is a statement of neutrality. In other words, okay, our currency is now backed by gold, so we're not on anybody's side. We're just trying to manage our currency, so leave us alone.
Yeah. I like that. I like that thought process. That makes a lot of sense, because what I found interesting is how vocal China has been in regards to their gold purchases. I mean, you'll remember, John, years of radio silence from China. I mean, like I say, they don't need to. You don't have to do the reporting. Everything that's mined in China is kept in China, but they're being so vocal. And I found that interesting that, every month they're coming out saying, "Oh, we bought more gold, we bought more gold." They want the world to know they're buying gold.
Yeah, that's a sign of confidence. They think they can manage their own currency
Right.
now, and that the U.S. can't do that much about it anymore. And I think it's kind of a solidarity thing with the rest of the BRICS. They're kind of leading the way and saying, look what we did. We bought you know thousands of tons of gold, and you can too. And then at some point,
Right.
maybe we set up that currency. We'll set up a gold-backed trading currency that we use with each other. And then we don't have to worry about, whether the rupee is going to hold its value and what we can do with it if we have a bunch of rubles or whatever. We've got this currency that we all understand that's backed by gold, it holds its value, and we use it to trade with each other. So China's kind of signaling that that is now a prospect. And it is. It's not a short-term prospect, but it's one of those things that's out there on the horizon that will happen when it's a completely doable thing, or the US forces other countries into it.
Talk to me a little bit about the yen. I know you had a whole article on this on your Substack, John. How far can the yen fall before Japan goes bankrupt? Pardon. You say the Bank of Japan will then face an impossible choice: support the yen with even higher interest rates and watch government interest expense rise to national bankruptcy levels, or push interest rates down to keep a lid on debt costs and cause the yen to collapse. Uh, how much trouble is Japan in?
Oh, Japan's in an unfixable spot. And the question more is timing now than anything else. Because basically, they had their big financial bubble in the 1990s ahead of everybody else, before the tech stock bubble. They had a real estate bubble. It burst. It was going to bankrupt zombie real estate companies across the country. And instead of letting that happen, which would have solved the problem in 2 hard years, they decided to support all of those companies with massive new government spending programs. And they've been at it ever since. The government debt in Japan on a per capita basis is higher than it's been in any country in human history, and it's still growing. And so what they've done is they've pushed their interest rates down for a long time, their interest rates were negative, which made it very easy to handle, big government debt, because they actually got paid for borrowing. So it was a cash flow positive process. But now their interest rate, because their inflation is picking up, their interest rates are starting to rise. And as their interest rates rise, the government's debt costs are starting to go up parabolically. And at some point, the Japanese government is going to be paying more in interest than it's going to be taking in tax revenues. And that's basically a death spiral point for a country there. And Japan is heading in that direction. And they don't have any fix, because if they try to fix the falling yen, the yen is starting to fall in a kind of a disorderly way now. They have to do that with higher interest rates. So they can stop the yen from falling by raising interest rates, but then they'll bankrupt their government with those higher interest rates. So there's nothing they can really do about this in the longer run. In the short run, they could fiddle around. But in the long run, the current
Right.
trends that are in place are going to kill the currency and bankrupt the government. So Japan might be a glimpse of our future, our intermediate term future, because we're headed in the same
You,
direction.
you almost beat me to my next question. I was going to say, when I speak to, uh, you know, investors in North America, there seems to be a disconnect of, well, why, okay, the yen is collapsing. How does it affect my life? But you just hinted as to why right there.
Yeah. If interest costs reach a point where they eat up so much government spending that the government can't take care of its citizens anymore and can't deal with crises anymore, because all their money is going to pay interest on the debt, that's a broken
Right.
country. And then everybody who's depending on the government suffers. So, basically the people who are hurt by this, and this is the really despicable part of the whole fiat currency system and the, debt-ridden societies that it has created, is the people who are hurt by the inevitable results of this process are the ones who trust the government. If you hold on to a big bank account denominated in your country's currency, or you keep a bunch of cash under the mattress, or you own bond funds, which is what financial planners will tell you the safe thing to own is. you're the one who's hurt when the currency inevitably collapses from excessive debt and excessive money creation. So that's what we're doing now. We're going to wipe out the savings of a huge chunk of the American population,
Wow.
and that's going to be brutal because
Yeah.
they're the ones who don't deserve to
That's
be hurt.
that is such a strong statement, John. The more trusting you are, the more you'll get burned. I mean, I know that can apply to everything in life, but um, that's some statement right there.
Yeah, you shouldn't be punished for trusting your government. That's the kind of thing that destroys the trust of a whole generation, and it's happened a lot in the past. Countries destroy their currencies all the time. You see this happening over and over again, where a country starts to borrow too much money, the debt starts to be a problem, so they start to debase their currency. That leads to a disorderly decline in the value of the currency, then a hyperinflation. Happened in the late 1700s in France. They had a hyperinflation, and then they got Napoleon and a whole generation of European wars. It happened in Germany in the 1920s. They had a hyperinflation, and then they got Hitler. And that's because when you wipe out a whole generation's savings, that generation is willing to accept pretty much anything politically as long as the people in charge promise to stop the bleeding. So you get a willingness to accept a dictatorship, or at least an authoritarian government. And again, you're seeing signs of that here, right? All of a sudden, we're voting for strong leaders who are willing to throw the Constitution overboard in order to fix what people perceive to be unfixable problems. So that's the later stage of the process. But the currency collapse part of this comes first. And then comes political chaos. And I'm afraid we're heading in that direction.
John, talk to me about gold now. I know you had another piece on gold porn part one. Gold bugs are suddenly cool. Talk to me a little bit about your thoughts in this new gold era. It's fun to be in gold. What are you telling folks who don't own gold yet and are saying, well, is it too high for me to get in? And what do you tell folks who maybe own some gold and are thinking, do I sell it at these prices? Talk
Well,
to me about gold.
okay, gold is the form of money that has held its value for 3,000 years. Um, and it's the money that people jump back into when their country tries a different kind of money and that money fails. So we're going through that part of the process right now. And again, lots of historical precedent for this. The Roman Empire had a hyperinflation when their copper coins were debased away. But gold held its value through the whole process. So if you were in gold, you were fine. Gold and farmland in the Roman Empire during their hyperinflation made you rich. That sort of thing has happened over and over again throughout human history. And we're back in that place again where we're ruining our countries' currencies, and that's Europe and Japan and maybe China and definitely Great Britain. And the people that used to trust their country's currencies are looking around for alternatives. And one of the things they're finding is the one that people always find in situations like this is gold. So they're going back into gold because that's a neutral asset. It's trustworthy. It'll hold its value for a really long time. And you're seeing gold's price go up because of that. Countries are buying gold because they no longer trust the US dollar as the reserve asset. And individuals are buying gold because they're worried about inflation. They're seeing their cost of living go up and they want something that protects them from that. And they're seeing people online like us talk about this, how gold will protect you if inflation really starts to pick up. And so you're seeing rising demand for individuals now. You probably saw what happened with Costco just lately, where they started offering gold and now they're selling $200 million a month of gold coins, which is a couple $1 billion a year from a brand new source, something that didn't exist 2 years ago. So Chinese gold buying didn't exist 10 years ago, and they're now buying gold on a massive scale. And on the individual scale, Costco is an example of people buying gold as kind of an impulse buy, right? They're at the checkout line and they see the flyer for gold on the checkout counter there, and they say, "Okay, toss a gold coin in my cart now too." And that's the kind of thing that you see happen normally, and it's the kind of thing that should be happening. People should be figuring out by now that they can't trust the dollar to protect their purchasing power, because in 1920 or in 2022 they lost almost 10% of their purchasing power in 1 year. So people have seen it happen, they know it's possible, and they see it coming on a bigger scale. And so they're buying gold and lately silver too. So, and I think that's what you should be doing. That's one of the quick and easy ways to protect yourself from instability in the financial markets. You just go to money that's going to hold its value for a really long time and just hunker down. And so the question is not, should you be buying gold? You absolutely should. The question is, in what form and how you should be storing it. And that's a subject for an hour-long show sometime, because it's complicated and it's interesting.
Just one more point, because I think this is important when you say, but do not touch your core physical gold slash silver. This is your bedrock generational wealth and should be immune to market fluctuations. For perspective, envision it saving your grandkids' lives someday.
Yeah. When you're shifting your financial life from financial assets like cash and bank stocks and things like that, you want to start with physical gold and silver that's under your control, that's accessible in some way. Again, that's a complicated subject, but basically, let's assume, for instance, that you know how to store and hide it and everything, and who to tell about it and all of those things. But you do that first with the intention of ideally never selling it. Let it be your generational wealth that you pass down to your kids and they pass to their kids, because it protects you against extreme events. It's kind of insurance against governments doing crazy things and that are beyond your control. So you do that. Once you've got that kind of bedrock gold and silver, real money basis for your financial life, then you can branch out into other kinds of real assets like oil stocks or gold and silver miners or ETFs that buy physical gold and silver and store it in vaults for you, or remotely stored precious metals like, set up an account in Switzerland and have them store some gold bars for you. We're talking about, in this case, people with a lot of capital, but to the extent that you can do that, that is the way to protect yourself from what's probably coming.
John, so for just segue here, for first time home buyers, do you even think about buying a home in this environment?
This is probably the worst time to buy a house in our lifetimes. And there have been some bad times in the past, so that's saying something. But yeah,
Wow.
houses got unaffordably expensive 3 or 4 years ago. And even if you got yourself a 3% mortgage or something like that, the average house was still out of your reach if you were the average buyer. But in that time, so let's say house prices have stayed the same over the last 3 years. Well, mortgage rates have more than doubled. So if you're going to buy the same house that you would have bought 3 years ago, say $500,000, but today you're going to buy that house with a current mortgage, your monthly payments are double what they would have been back in 3 years ago, even though it was very expensive back then. So that's why the housing market is kind of frozen. There are all these people who are stuck in houses with 3% mortgages. Where are they going to go? If they sell their house and they have to take out a new mortgage, the price will be, yeah. So the housing market is kind of frozen. There's not very many sales going on, even as inventory is starting to go up. And so what that usually portends is a big crack in prices. When more and more houses are for sale, but fewer and fewer houses are actually selling, prices have to come down. And I think we're headed for that. We're going to see depending on your point of view, a catastrophic or a really nice drop in house prices. And at some point in the cycle, houses are going to be cheap again, and interest rates will go lower, and that'll be the time to buy
Right.
in. But this is absolutely not that time
So
now for most people.
so hang tight on the housing front, guys. John, I absolutely love this conversation. We need to bring you back ASAP. But just to wrap, you've been in this market, at least since the start of since the launch of your book, which was over 20 years ago. Uh, have you ever seen a time like this?
Um, this is an extreme version of the times that we have gone through in the last 20 years. So not exactly like this. And although, Daniela, I'll bet you a lot of your guests in the past have said something like, Daniela, you're too young to remember the 1970s, but trust me, we're heading back into something like that. And I think you could use the 1970s as kind of a template for what's coming. So we have kind of lived through times like this, but not nearly as serious. Back in the 1970s,
Wow.
inflation started to pick up, government spending was growing, government debt was rising, inflation was rising, and we had civil unrest, and there were wars in the Middle East. So it was very similar in a lot of ways. And what ended up happening there is that interest rates spiked, inflation spiked, gold and silver just went through the roof. And to fix it back then, we had to raise interest rates
Right.
to like 18%, which the
Wow.
reason it's different today
Right.
is we cannot do that today because we're so deeply indebted that if we raise interest rates even a little bit from where they are right now, we bankrupt huge sections of American society. And then we go into something like the 1930s, a deflationary depression. So we don't have the tool that we used to fix things back then. Which takes us back to the Fed being in a box that it can't get out of. We don't have the tools anymore to fix the kind of crisis that we're creating. So who knows what happens when it finally
Yeah.
starts biting.
And correct me if I'm wrong, John, there's also not the sense of community that I'm sure existed in the 70s that is not present today.
Well, we were
So
very,
even to get through those times, right? To
yeah,
have a support group.
yeah, we're a lot more diffuse than we used to be. People lived closer to home in the 1970s than they do now. We move away, and you get 3 generations in 3 different houses, and
Yeah.
it, yeah, I mean, but we were still kind of a fragmented society back in the 70s. We had the civil rights movement, and we had the Vietnam War protests, and so we had unpopular wars. We had college campuses just inflamed, and in other
Yeah.
words, we had things like we're seeing now, and they led to what ended up being a major financial crisis. So yeah, I think probably the lesson we'll learn from this,
Yeah.
if we survive it intact,
Right.
is that we need to
Right.
go back to almost 1950s perspectives where we have neighbors that we know and we can trust, and we take care of our families and things like that. We have backyard gardens where we grow some of our own food, things that we've kind of drifted out of, but were very healthy lifestyle
Yes.
choices. We need to go back to that.
Exactly. Amen to that. John Rubino, like I said, love having you on. Come back soon. Let's not wait 20 years. Um, John Rubino, they can read more from you on Substack. Thank you so much.
Thanks, Daniela. Great talking to you.
And I always invite listeners to book a Calendly appointment. I know we talk gold, silver, monetary policy. We can help you build a strategy around this and prepare yourself for everything that John is warning could happen. So book a Calendly appointment with one of my wonderful colleagues over at ITM Trading. It's a free session. It's informative. It's entertaining. You'll laugh. You might cry, but it will be healthy. So do it. You could do that in the link below, and we'll see you soon. Don't forget to sign up at danielacambone.com to stay on top of all these incredible interviews. I love having guests like John Rubino on, and I love you, my audience. Thank you for watching. We'll see you soon.